out of two questions, I mean, this one is easy, next one is also easy, but that is quite important because most of the questions will be like that in this chapter. So let's discuss this one first, then we'll go to the next. This question says stock with a term of 9.5 years. In actual science, when we say stock, it's not about share or equity. We're talking about a bond here. You write 1 here, 5% per annum payable half yearly in arrears. This means 2.5 every half year. So here 2.5, here 2.5 in arrears, and the total is 5 in a year. When you see payable half yearly in arrears means these are the arrear payments, payable half yearly, the total is 5. You have to find the yield. To find the yield, you have to know everything. So we'll write here the price as well, 85. This is the purchase price. You continue up to this. And the final selling price is 105%. And the final value is 105. This is given 105%. If you take 100 nominal, it will be 105. If you take 1000 nominal, it will be 1050. And the coupons will be half yearly to 25 every half year. That way also you can take because it's not mentioned. Now, if you write equation of value, it will be this 85 is equal to, that is method 1 we say. This is method 2. In this chapter, we'll use method 2 frequently. However, let me write once again because annuities will come time and again. You write 2.5, 9.5 years. So 19 periods are there. We have taken period half year. And then you will have 105, 19. If you solve this equation, you get I, but that I you get, that is actually I2 by 2. Because we get period interest rate, that is half year. From I2 by 2, suppose you get I2 by 2, whatever, you have to find your original I. If you solve this one, whatever I you get, that is not I, that is actually I2 by 2. From I2 by 2, you can find I using 1 plus I2 by 2 square is equal to 1 plus I. You have to solve this equation. Then you get I. This is your original I. This is one method. This is one method. Here 9.5 comes. Okay, so if you don't like this, you can do this way because you will be using interpolation. Let's try this way first, method 1. Then we'll go to method 2. And we'll check which one is easier in this case. Remember, in exam conditions, you never get time to test. Seeing the question, you need to understand which method to apply where. First of all, I need to have a rough guess. Then only we can proceed further. Here you are getting 5 per year and 85 to 105. Here also we got 20 extra. In almost 10 years, 20 extra. So 2 per year. In 10 years, we got 20 extra here. There is a capital gain of 20. So if you divide among 10 years, so 2 extra, here already 5 plus 2 7. Okay. But this is not 100 also. So it should be around 8% according to me. I don't know. Okay. So you try to find this value, the right hand side at 8%. If you find the value at 8%, I'll tell you another way. Okay. You can use binomial theorem. Okay. In binomial theorem, if you take two terms, this is the easiest. If this works, that's fine. 1 plus x power n approximately equal to 1 plus nx. You can try with this. I would like to try with this. If you are interested in the other methods, you can go through my slides I must have sent you, or that must be there in one of my videos. Okay, you can watch those. In most of the cases, you can use this one. Here A19, that will be 1 minus V19 divided by I. Okay, this is also V power 19, that is equal to 85. 2.5 is here. So where you get this one, there you have to take this one 1 minus nx. So this will be 1 minus 19i, minus minus you will get plus 19i. Okay, let me write 1 minus 19i by this one divided by I into 2.5 plus 105 1 minus 19i. Even if you do all these things, finally you have to solve using interpolation. Now here 1 and 1 they will get cancelled. You get 85 is 2.5 into 19 plus 105 minus 105 into 19i. Okay, you have to solve this one. Solve this one and find I. It will be between these two. We have to find the final value. You have to interpolate. You know how to do interpolation? What is final I? 85 is the one. Okay, this is your final value, and we want to find the interest rate, that is y. Y is equal to y1, that is 3%, plus y2 minus y1. Okay, y is y1, this is y1, plus y2 minus y1. Y minus y1 is m into x minus x1. This is the formula, right? So in slope, I've written m y2 minus y1 divided by x2 minus x1. So here the difference, if you see, this is 1%. Okay, y2 minus y1. So when I consider y1 is 3%, this will be 1%. Then x minus x1. What is x? This is x. 85 minus x1. This is x1 corresponding to y1. 95.689 divided by 85 minus x2 minus x1. 95, sorry, I have to write x2 here. x2 is 82, right? 82.672 minus 95.689. So how can you calculate y? You find this one first, you subtract using calculator, then divide by this. Okay, you can use bracket one time, you can do whatever answer you get, then multiply by this, then add by this. This is actually I2 by 2, because we found the half year interest rate. Our I here is half year interest rate. Now you have to find your I. I, if you find, then 1 plus I is 1 plus I2 by 2 by 2 power 2 minus 1. So you do this 1.03, square it and subtract 1. 7.788. Okay, that is 7.8%, you can say. We got 7.8% by this method. So when you are using interpolation, it's always better to use that method, because if you are using this method, you will directly get the answer, but yeah, something will be there. If you are able to manage, that's fine. But mostly we'll be using method 2 only. Wherever there is interpolation, it's better to use method 1, not method 2. Let's write the equation and see what problem you might get. Here 85 and here v power 9.5. Here also you should write 1 minus. So if you solve this equation directly, you get I. But for every I, suppose you start with 8% or 9% or 7%, whatever, when you calculate this side, this one, for I 8%, you have to find this one. So when I 8%, you have to get from actual table, or you have to calculate I2. For I 8%, you can write 8% here. You need I2 also. Here I is there, here I is there, but here I2 is there. However, if you don't want to find I2, then you can do another thing. You write the equation for I2, 1 plus I2 divided by 2 power 2 is equal to 1 plus I. So what will happen is this 2 you bring this side, this will be half, then minus 1 multiplied by 2. So you replace I2 by this. Then what will happen? 2, yes, correct. 2, 1 minus, is it 1 plus I power half minus 1. If you replace by this, then this method is better, because directly you get I, but a lot of calculation will be there. However, you get directly I, there will be no problem. For I 8% you find the value, it should be around 85. Then try with 9%. Then what will happen? Both the values will be less than or greater than. Then you have to try with other, okay? You have to go that side. I have to take 7%. Remember, things are inversely proportional. If you take less, then you get more, okay? That way you can try. So you can take any two here, these two or these two. Make it sure that the two values are this way. One is more than 85, one is less than 85. You apply this one and do yourself and try to get the answer. Let's go to the second one, which is very important. An investor purchased a bond with exactly 20 years to redemption. The bond redeemable at par 100. Nothing is given means you can say you can take the nominal price is 100. Okay. The redeemable at par means equal. The par value depends on the nominal value, not the purchasing price. Even here purchasing price is 88.53. As a gross redemption yield, GRY of 6%. It pays annual coupons in arrears of 5%. Okay. Let me write the equation. Gross redemption yield 6%. So if you find the discounted value at 6%, it's so simple. 5A20 100 V20 at 6%, you will get P. Okay, and you already got it. The purchase price 88.53. That means you purchase it at 88.53. So what you thought while purchasing? You thought that if I give 88.53, even you gave 88.53, and you thought that you will get 55 for 20 years and then 100. These are called cash inflows. These are the amounts you will get because you spent this amount. Series of payments and final repayment will be 100. However, what happened? After 10 years, you changed your mind. Now you are selling it to someone else. This is 10, 0, 20. So here you purchase, and here you are selling it to B. You will sell it to B. B will purchase from you. You kept for 10 years, okay? So at what price you purchase, you sold to B, or at what price B purchased from A, that you have to know first. Then we'll find what is your actual yield. You thought you will get 6% yield because 55 anyway you are getting, and there is a capital gain here also, 88.53 to 100. So a little bit more than 5, that is 6%. That is correct. It's given. Even 6 given, we found this one. So you expected a yield of 6% per annum, but you will not get 6% ultimately because you sold it at 10. If you wait till 20 years, definitely you can get 6% yield per annum. On an average, your income will be 6%. I mean, your final yield, not the income here. After exactly 10 years, immediately after the payment of the coupon, then due, this investor sells the bond to another investor B. That investor pays income tax at a rate of 30% and net return 6.5%. So you are not paying income tax, but that guy is paying income tax. Okay. Now we'll separately see both. Consider this one, this guy, 0 for him, 10 years. That guy will purchase after the coupon payment. So that guy will get 10 coupons starting from 11, 12. Okay, let me write 1, 2. So for B, time starts now. B will purchase at some price. The coupons are the same because this is company bond. Company will continue giving coupons. It doesn't matter who has this bond. So company will get 55, sorry, B will get 55. Finally, B will get 100. Whatever payments A supposed to get, these payments from 11, because this coupon already he has taken. Okay. So before selling this one, so what will happen is all these payments now, these will go to B. So B is now counting how many payments B will get. B will get 10 payments plus 100, 11 payments, because B is the paper now. B will show paper, then get 5. B will show paper here, paper here, paper here, and finally he will submit the paper. He will get 100. Initially it was with A, so A thought A will get 100. Now that A is selling to B, A will not get this 100. This will go to B. Now B wants a yield of 6.5% for this 10 years. So he is calculating the price. Okay. Suppose this price is the price at which B is ready to purchase is R or P1, whatever you want to write. So R is the price at which B is ready to purchase. But B thinks that 6.5% is something he should get from this kind of a transaction, this kind of a purchase from A. So you see here, net return 6.5%, but he is paying income tax 30%. So he can calculate his purchase price. That will be the selling price of A. So this is the purchase price of B, that is R I have taken. That should be 5 into 1 minus 30% income tax for 10 years plus 100 V10. So this B will calculate at 6.5%. And whatever answer B will get, he will say to A. B will say to A, see, I'm expecting a return of 6.5%. However, I'm paying income tax. Though I'll get 5 by 5, but my value will be 5 into 0.7, that is 3.5. 1.5 I have to pay, that is the income tax. I will get 3.5. And finally, I get 100. That I'm discounting because I need a yield of 6.5% I'm expecting. So this is what I'm ready to give. Okay, this is the purchase price of B. This amount B will give to A to purchase the second hand bond, you can say. Suppose A purchase here, and from A, B will purchase. If you have the paper, you are the owner, that's all. So A will give it to B at what price? You have to find here, according to the question. Okay, 78.4, that's fine. So 78.4 is something B will give to A to purchase this one after 10 years. When A purchased, A thought that A will keep for 20 years, but now after 10 years, he changed his mind and he sold it to B at 78.4. Now the question says, calculate the annual effective rate of return earned by the first investor during the period for which the bond was held. You need not worry for this because some ask me, no, it's already given yield 6%. Why they are asking once again? This is the yield for 20 years. But now that he sold, you have to find for 10 years, these 10 years. Because at 10 years he sold it. Now what is the redemption price of A? Redemption price is 78.4 because this is the last one he got. So how much he spent? That is the price he paid, 88.53. And in respect of this expenditure or the investment, you can say he received 5 at the end of each year for 10 years. And finally, when he sold, he got 78.4. You will not take 100 here because that is the final one. Okay, after 20 years only that can be redeemed and company will give to that guy who holds this paper. So that 100 will not include here. Your redemption, A's redemption price is this one because this is the price he gave to purchase and these are the payments he got for 10 years. So if you solve this one, you write equation of value once again, 88.53 is equal to 5 A10 plus 78.4 V10. You have to solve it using interpolation. You will come across interpolation all the time in this chapter and in subsequent chapters as well. You get I. That's all. Any doubt?
No, sir.
Okay, things are clear now?
Yes, sir.
Okay, okay. All right then. Yeah, this much for today's class. Thank you.